Cool. All right, let's get into Nvidia. First of all, let me know in the chat what you guys thought. Was it a good quarter? Was it a bad quarter? Were you impressed? Were you not impressed? I was impressed. I bought another 30 shares last night. I am getting a lot more comfortable buying more shares of Nvidia. I bought them at 130 last night in the overnight markets on Robinhood. I also have to tell you guys about the option premiums that I was looking at into last night, because it was really surprising to me. So after we go through the results, we'll talk about some of the covered call premiums that I did not expect. But when I really did a deep dive last night, I was like, oh, this is a different strategy that can be utilized. So we'll talk more about that. But in general, I think they crushed it. So real quick, let's hear from Jensen and get his thoughts on the quarter in terms of what Nvidia is becoming post DeepSeek, or at least post the perception of DeepSeek. And then we will talk about the actual numbers themselves.
Really exciting companies, and there's several of them related to physical AIs. There's just handfuls of each one of them, and each one of them needs additional compute. And that's, the type of things that Andy talks about, because they need to go to AWS and they have urgent need for more compute right away. And so that's on top of what we already knew to have POs and forecasts and such. The midterm comes from the fact that this year's capital investment for data centers is so much greater than last year's. And of course, we had a very large year last year. We had a great year last year. It stands to reason that with Blackwell and with all the new data centers going online, we're going to have a fairly great year. Now, long term, the thing that's really exciting is we're just at the beginning of the reasoning AI era. This is the time when AI is thinking to itself before it answers a question. Instead of just immediately generating an answer, it'll reason about it, maybe break it down step by step. It'll do maybe some searching in its own mind before it creates and composes a smart answer for you. The amount of computation necessary to do that reasoning process is 100 times more than what we used to do. So if you could imagine, we thought computation, the amount of compute necessary, was a lot last year. And then all of a sudden, reasoning AI, DeepSeek was an example of that. ChatGPT 4o is an example of that. Grok 3 reasoning is an example of that. So all of these reasoning AI models now need a lot more compute than what we used to
Let me stop you there, because
it's even more load.
Because some people took DeepSeek to mean actually that you need less compute, right? Because the initial report was that they were doing more with less. But you're saying, in fact, some of what came out of DeepSeek was the opposite, that there's going to be more compute demanded. Unpack that for me.
There are 3 phases in how AI works, how AI is developed largely. Number 1 is pre-training. It's kind of like us going through high school. A lot of basic math, basic language, basic everything. That basic understanding of human knowledge is essential to do what's the next step, which is called post-training. In post-training, you might get human feedback. It's like a teacher showing it to you. We call it reinforcement learning, human feedback. You might practice and do thought experiments. This is preparing for a test. You're doing a whole lot of practices. We call it reinforcement learning, AI feedback. You could either also do tests and practice, and we call it reinforcement learning, verifiable reward feedback. So now basically it's AIs teaching AIs how to be better AIs. That post-training process is where an enormous amount of innovation is happening right now. A lot of it happened with these reasoning models. And that computation load could be 100 times more than pre-training.
That's it. I mean, that's all we needed to hear from the call. He could have said that on the call, and basically the call could have been over. Like, the fact that he's saying the computational power for post-training is 100 times more based on the reasoning. And if you've used any of the recent models that involve reasoning, basically it's like the model thinking for itself and showing how it's thinking and then giving you a better output because of all that thinking. That means more NVIDIA chips. That means more demand. And so as a result, how do we sort of reconcile this as investors in the numbers? Well, NVIDIA guided for $43 billion in Q1 revenues. And their guide, they usually beat by minimum $1 billion. They're probably going to do $44 billion. And so this is a company that is absolutely growing, and they are not slowing down. So overall revenues were 39.3 versus 38, $11 billion of Blackwell versus 9 billion. Most people thought it was going to be 9 billion. I don't think any of the sell side analysts thought we would get 9 or thought we would get 11 billion of Blackwell revenues, but we did. And then 89 cents versus 85 cents adjusted when it came to EPS. So, I mean, when you look at this stuff, it just reminds you that these numbers are real. They're not fake. Demand for Blackwell is amazing as reasoning AI adds another scale law, which is what Jensen said last night. They did 72 billion in profits, up 145% year over year. They have a 55% net income margin. That means for every dollar of revenue, 55 cents becomes profit. The reason why that's so amazing is because this is a hardware company, not a software company. There is software involved, obviously, but the fact that they're able to bring up as much net income as Google, they brought in 22 billion last quarter. Google brought in 25 billion, and Google has juicy margins on search. Nvidia has to like make an actual chip and try to figure out how to get a margin there. It's just incredible. And then they bought back $7.8 billion of their stock. They still have another 40 billion they can use to initiate buybacks. I don't know if the stock's going to pump this morning. And in fact, if the stock doesn't pump this morning, if we get a dip below 125 again, I will absolutely be excited to buy that dip. My average is at now 125.3. If we get below that average, I will get excited to buy. But nothing in this quarter showed me that there's a red flag. Now, I know there are some people saying, well, the gross margins are starting to go down. The overall growth rates as a percentage of the previous growth rates sequentially are starting to slow down. They're not beating by as much as they used to beat by. They used to beat by 2.5 billion. Now they're beating by 1.5 billion. I get it. Those are all, in my opinion, idiosyncratic concerns. They're not emblematic of structural problems with Nvidia. They're definitely not emblematic of a demand problem when it comes to Nvidia. And Amazon's CEO Andy Jassy literally said yesterday, hey, if we had more chips, if we were not as supply constrained, we could sell more cloud workloads of AWS. That comes back to Nvidia being able to not be supply constrained as well and provide them the chips. Another thing that was so important on the call, and I know we got Trump tariffs going on right now. That's why the market's taking a little bit of a breather. We'll talk about the Trump tariffs because he is headfast on getting these tariffs to come in. Another thing that they talked about is Blackwell Ultra, which is a next generation above Blackwell, and then Rubin, which is the next generation above Blackwell Ultra. So they were talking about two different generations of chips that they're getting ready to ship, basically priming their customers for to be able to get in line for essentially once they are released. And they've barely begun shipping Blackwell. I'm like, this is a company that is absolutely looking into the future when it comes to their product roadmap, their product velocity, and how to maintain those growth rates. Also, as Lewis says right here, they did say margins will return to the mid-70s by the second half of the year. So although it's probably going to bottom out at around 70% flat in H1, so for the next 2 quarters, by Q3, Q4, we should get back up hopefully to around that 75% range, which means I don't think margin compression should be something the street would be like super upset about, even though margins are not at 77% anymore. So I mean, like, yeah, I'm buying Nvidia. Like, I think this was a great quarter, and if we actually do get a dip, if this thing drops below 125, which is like when I really get excited, even if it gets like 126, 127 again, I mean, I want to own that name. I think one thing that's happening with Max 7, and we're going to take a look at a lot of the Max 7 EPSs and forward earnings, because it's quite phenomenal when you take a look at the Max 7 compared to each other, how cheaply they're trading. I think we are currently in a market environment where tech is sold off. Nvidia might just end up selling off because Google, Amazon, Meta, etc., are all sold off as well, which is not the best for Tesla because Tesla's already at a pretty extended multiple, so that's getting compressed. But if 2025 is the year of accumulating the best companies in the world, because for whatever reason the market wants to rotate into other assets that are, I don't think as high quality, but nonetheless they want to broaden the market momentum, which is not the worst thing in the world, then I think we all get a great opportunity to accumulate amazing companies at ridiculous discounts that are, by the way, not going to be affected by interest rates. I mean, for the far majority of these companies, they will be okay whether interest rates go up and down because they have enough cash to buy back their shares. They have incredible free cash flows, and they have moats that aren't contingent on rates going up or down. So, I mean, I think the quarter was incredible, and I think the quarter is another reason for me to get more excited to add to my position. Now, here's what I wanted to say about the covered calls. I was actually on the phone with Steve last night, and he brought this to my attention. I couldn't believe this when he said this, and some of you guys probably know this, but the reason I didn't sell covered calls on Nvidia was for 2 reasons. Number one, I wanted to see if earnings could get a little bit of a recap or a little bit of a rebound, and if they did, then it would be more prudent to sell covered calls after we get some green, which is what we're seeing right now. Hopefully, it lasts in the market open. But the other reason was because I just didn't want to give up my shares for cheap, right? Based on what I was looking at last night, and when the market opens, we'll kind of do an update on this. Nvidia is paying almost 3% a week. 10% out of the money. Let me say that again. 10% out of the money per week. Nvidia is paying around 2.5 to 3% on the covered call. Yesterday, I was looking at, and this number will change right now, but I was looking at the $142 covered call. It's paying you $3 a contract for March 7th. Why does this matter? As an option seller, theta is your best friend. You want theta to expire worthless. You want it to go to zero, which gives you the ability to collect all the premium. Now, if you are holding an option, aka a $142 call on Nvidia, which means you're putting up your shares to get sold at 142. If Nvidia is above 142, your shares get called away, and you have to wait 30 days. Well, a lot could happen in 30 days. In 30 days, I mean, Nvidia could rebound. It could get above 142. It could theoretically go up 10%. In a week, it's a bit unlikely, right? Like in a week, like, and he was showing, I was like, I don't believe you. And he was like, no. He was like, when I found this out as well, I realized that selling covered calls weekly on Nvidia is a hell of a form of income generation. And the numbers are correct. You can go 10 to 12% out of the money, which means Nvidia would have to move like $250 to $300 billion in that week in order for your shares to get called away, and still capture about 3% on your money, aka on the shares that you have. So for me, I have 500 shares. Now I have 530 shares. I could sell 5 covered calls theoretically at the $142 strike for March 7th, and I could pick up $1,500 in income for the week, not for the month, for the week. And I was just like, okay, if I want to do 145, be even more conservative, I can pick up $1,200 for the week. And if Nvidia does get to 145, okay, I'll roll that contract, because if I don't expect Nvidia to go from 145 to 150 to 160 and for me to be underwater on those covered calls, right? I don't expect it to be like a Palantir situation where you write a call at 40 and then Palantir goes to 80. We're not in 2024 anymore. And in general, I think market volatility will be to the downside even after big moves, or at least it'll be flat versus just up and up and up and up. And maybe it could just be up and up and up, but I would hedge my bets against that. If that's the case, I mean, if you've got Nvidia shares and you're willing to sell some covered calls on it decently out of the money, 10, 15%, and you could still collect almost 2% or maybe 2.5% on your money per week. I mean, goodness gracious, dude. It's like, I didn't realize the options market for Nvidia was that amazing. That's just because it's earnings week. Well, that's fair. Now, based on what Steve was telling me, he's been doing this for a couple weeks now, and it's not just been because of earnings. But we'll see in the morning at 9:30. We'll see where it opens up. I would want to write the covered call for March 7th, and we'll see if these premiums collapse or if they're still reasonable. But the fact is, the open interest is insanity. Why is the open interest insanity? Because 300 million shares, yesterday it was 298.7 million shares a day are traded on Nvidia. And that's when I realized, like, I just wasn't looking deeply into it, which is that, holy crap, the options market is insane and people are gambling. I mean, dude, people are buying $200 calls for like 3 weeks out. I don't know who's doing it, but someone's doing it. And I wouldn't mind selling them those calls. So the fact that the options market is this juicy is very exciting. And I think it's only going to get juicier as Nvidia continues to gain more momentum. If it dips, I want to buy these shares because I think this is one of the best quality Max 7s that we have currently right now. So that's what we got on Nvidia. All right, we'll talk more about Nvidia in a bit. We'll get deeper into the numbers, but the headline numbers to me were incredible. I don't think this is a day where you sell Nvidia because the stock is flat or down. I think the market's just kind of scared about the cyclicality. The market's probably going to keep being scared until Nvidia keeps putting up numbers. But eventually, as the Max 7 gets back to normal, I think Nvidia will be one of the big winners in that race.